Whenever the gold to S&P 500 ratio spiked to the upside, that always ultimately led to a big crash happening to platinum. And so as we are currently seeing this ratio spike to the upside once again, in today's video we discuss whether we're about to see a crash happening once again as well here to platinum. Let's first have a look at the technicals and then continue with the fundamentals and macroeconomics to understand the underlying drivers of this commodity. As you can beautifully see, we do have some support and resistance levels. We do have this resistance at around $2,490. And we do also have those supports here at 1,988 and also 1,905. And we've actually retested those support and resistance levels for quite some time now. We're in this kind of channel moving between those resistance and support levels. But whether we're actually about to see a breakout to the downside or to the upside can only be answered by taking a look not only at those technicals, because those technicals would suggest we do see some downside happening here next, as we do see this value area here below at 1,700. That could certainly be one move that might be happening next. We're also seeing that cumulative volume delta has been decreasing significantly. But whether this is actually a trustworthy signal here, that can only be checked by also checking the underlying drivers, such as fundamentals and macroeconomics. Let's first have a look at some supply and demand data. We do see that market deficits are about to narrow. We have seen big market deficits. We've seen more demand than supply. That has been ultimately been the reason we've seen those surging platinum prices in the last few years here. I mean, look at this amazing bull run that we've witnessed here. But this is about to narrow. This is about to reverse for 2026. This World Platinum Investment Council says we do see that we're in fact seeing a small supply surplus happening. We are seeing a market surplus happening, and that obviously puts the platinum market in a completely different objective in our eyes, since we are not seeing this bull market being actually supported by the supply and demand data that we are just seeing here. And so it seems like this is certainly showing you that the underlying driver of this bull market, which has been this massive market deficit, that this is actually about to reverse, that we might actually see a big bear market happening as we've seen it in the past few cycles. And so to really understand those cycles, let's just have a look at those cycles by taking a look at key ratios, at key indicators that have predicted those crashes so far. And so if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video so you don't miss future videos, and also support us for our work here on YouTube. And also don't hesitate to ask questions down in the comments or just give us your opinion. Thanks for your support. Now let's have a look at the weekly chart here at platinum, and as we've already seen, we do have this correlation between the gold to S&P 500 ratio and platinum, because obviously whenever you do see gold suddenly start to outperform the stock market, then you tend to see underlying weaknesses in the economy. You tend to see this flight to safety happening, and that preceded many big sell-offs and many big crashes here at platinum. To add on to that, we have to take a look at, for example, the dollar, which obviously beautifully shows you whether we do have liquidity conditions being eased or being tightened. Whenever you do see the dollar fall, that is certainly a bullish effect on the platinum market, since the platinum price is obviously measured in dollars. And so whenever you do start to see this actually move to the upside here, for example, as the great financial crisis hit, that whenever you see that actually happening, that can really lead to big price disruptions, as we've seen it here in 28, but also here in 2014, 2015, we've seen the DXY strengthen. We've seen that happen in a short, quick crash here in 2020. We've also seen a short spike to the upside that ultimately led to a spike to the downside here at platinum. And as we've seen this big weakening trend here at the DXY, we've also seen this beautiful bull market here at platinum as we've seen this stimulus actually entering the market. But as we are currently seeing this kind of reversal here um, at the DXY, I mean, you can beautifully see that we're certainly consolidating here, and in fact, this trend is certainly slowing down. Then you might actually expect to see a reversal. You might actually have this objective that we could see a deeper correction or maybe even a deeper structural crash happening next to platinum. And also, if you consider the gold to oil ratio, you do see that whenever this spikes to the upside, whenever gold starts to outperform oil, that also actually signaled many crashes that we've seen here. Now, as you might expect, we're currently seeing the gold to oil ratio actually fall, since we're seeing the war here with the Middle East and oil prices are surging. And so the denominator of this ratio is currently rising, therefore this ratio is falling. Now, that obviously has also preceded many crashes. We've seen that beautifully representing the inflation. We've seen that actually happen here in 08, in March 08, in February 2008, for example. We've seen that the gold to oil ratio actually went down a little bit, but eventually we've seen actually that gold started to strengthen relative to oil again, and we've seen that ratio to pick up. And so, as we might see a reversal here, we might see this trend to continue for some time, but eventually we at Kronos expect to see a reversal here at the gold to oil ratio, and ultimately a spike to the upside once again, as we've seen it beautifully happen many times here in the history. Now let's have a look at one of the most important indicators, the copper to gold ratio. This is probably one of the most important indicators because it beautifully shows you the nature of the business cycle. The business cycle is representing the liquidity cycle, it is representing the economic cycles and also the debt cycles. And whenever you do start to see copper actually outperform against gold, that is a bullish signal concerning the stock market, concerning also platinum, because the economic environment is just beautifully growing. This copper is an industrial metal, gold isn't, and gold is highly demanded with economic distress. And so whenever you do start to see gold actually strengthen against copper, in other words, when you do start to see this ratio falling, then that really beautifully actually signals those crashes. We've seen that precede many crashes, and ultimately the copper to gold ratio starts to fall off a cliff. We've seen that happen here with the great financial crisis. Gold is, as a safe haven asset, strongly outperforming copper, and that's exactly what we've seen happening, for example, here in 2008, but also many times afterwards we've seen that ratio fall as we've seen the cycle end, the liquidity cycle end, the business cycle end, and that is exactly what we like to watch. And as we are currently seeing this ratio falling significantly once again here since 2022, that obviously could actually beautifully signal the next few crashes that we might see, and maybe even this next crash that we might see here in 2026. So we across do see those developments here at the fundamentals. We do see that the market surplus that the market deficit that we've seen is actually now turned to be a market surplus. We've actually seen that demand is now actually lower than supply, and obviously that is certainly putting downward pressure on the platinum market. From the technical perspective, we do have this value area in which we're currently moving in between the resistance and the support. That is certainly the kind of area that we're currently moving in, but we expect, as those fundamentals and macroeconomics that we've just assessed are so bearish, we expect to ultimately see a crash below those levels, a deflationary crash, as it happened so many times here in history, and that ultimately will bottom out when we do see QE-driven inflationary recoveries. And that can happen quite similar to what we've seen, for example, here in 2020 with the COVID crash. And so that is what we believe is going to happen next in the next few months and years. If you liked this analysis, if it was helpful to you, don't miss to click the like button and subscribe so you don't miss those videos in the future, and support us for our work here on YouTube. Thanks for your support. See you the next time. Bye bye.